The market has finally turned greedy, and we're seeing the S&P 500, the Nasdaq, both be overbought according to RSI. What I'll do in this video is I'll go over the reasons why I think the stock market could see somewhat of a decline over the coming trading days, over the coming weeks, as we are overbought, and the indexes like the Nasdaq and the S&P 500 are both coming up to major levels of resistance. So we'll go over that. Right now, though, let's take a look at the fear and the greed index from CNN. So, for those that don't know, this basically tells you what the market is feeling in terms of greed and fear. So, as we can see here, that we are seeing greed in the market right now. And the last time we were this greedy was in September. And if you remember what happened in early September, in mid September, we saw a pretty decent decline in the stock market. In fact, the stock market is roughly where it was in September right now. Therefore, I believe we could see another rejection around this level, especially as we're seeing a similar signal from the market in terms of greed. In fact, we're actually more greedy than we were in September when we saw that decline. We have a 63 grade on greed, and in September, before we had that drop, we had about a 60 greed read. So the market is greedy, and this is a big change from a week ago, because we were actually fearful just a week ago, and we had extreme fear just a month ago. So this is definitely a pretty big change. And one thing I always like to look at is put to call ratio. So right now we're seeing 0.78 for put to call ratio. For those that don't know, this basically just tells you what the broader market is thinking. And this tells you that there's a lot more calls being purchased than puts, which signals to you bullishness throughout the stock market. Historically, though, there are more calls being bought than puts. So it's not super shocking, but we're at a level we haven't seen since actually July and June. And if you remember June, we also saw a pretty big decline over the coming weeks in June. So we're signaling that we could see somewhat of a pullback from a greed and fear standpoint. And then we're also coming up to test a major level of resistance for the SPY. So the SPY has topped out around 451 in Friday's trading session, in Wednesday's trading session, on September 14th, and on September 1st. We topped out actually right where we are right now. So this is kind of a range here. So from about 452 to about 450, I think that is a level where we could see some selling pressure on the market. As I said, the market is overbought according to RSI. And let's just take a look at over the past couple times when the stock market was overbought, when the S&P 500 was overbought, did the market typically react negatively? So we were overbought in July, in late July, and we saw a move lower over the coming weeks. It did take a little bit for this move lower to happen, though. So we were overbought for almost 6 or 7 trading days, and then we saw that move lower. So this may not be instant. And then we were overbought in June of this year as well. We saw a move lower over the coming trading days from June 15th and on. And then we were overbought. The last time we were overbought was in February. Saw a move lower after that. And then we were also overbought in August of 2022. Saw a move lower after that. And then we were overbought in November of 2021, and we saw a slight pullback over the coming trading days. And then we were also overbought in April of 2021, and we saw a move higher over the coming week. So that was, if my memory is correct, that was almost 8 examples of the stock market being overbought. We turned negative in 2 of those. So, roughly 75% of the time, we can expect to see the broader stock market move lower in reaction to overbought conditions. So that number may not be exactly correct, but definitely tells you that more than not, when the stock market is overbought, we do see somewhat of a pullback. I'm not saying the stock market's going to fall off a cliff. I think, when inflation is so high, it makes sense that stocks are going to rise. Just because inflation, the greatest hedge for inflation is stocks. So I'm not calling stocks are going to go past 2020 lows or anything crazy at all. All I'm saying is that we are overbought on the S&P 500, which historically does lead to a decline for the S&P 500. We're coming up to a major level of resistance. Therefore, I see it as very logical that we could see a move lower over the coming trading days. Obviously, only time will tell. But let's take a look at the Nasdaq as well and see if we have a similar setup. So we're overbought, similar to the S&P 500. We're overbought, so that should help push shares lower. Also, we're coming off to test a major level of resistance at around 1600. Really should say 15.9. So at around this level, this is where we actually topped out in July of this year. So I believe, similar setup to the S&P 500, we're overbought. We're coming up to a major level of resistance. I believe we could see a move lower off of this level over the coming trading days. Obviously, a large part of that, as I said, is the overbought conditions for the Nasdaq through RSI. And then when we take a look at the interest rates here, we see that interest rates have declined roughly 12% over the past 19 trading days. This is a very steep and quick decline from interest rates. I think we'll see some bond selling here, which will force interest rates higher. So my humble opinion is that interest rates start to climb back over the coming trading days, over the coming weeks. So just to kind of sum things up, we are officially greedy in the market, and we are seeing the S&P 500, the Nasdaq, both be overbought according to RSI and coming up to major levels of resistance. And we have the interest rates which have fallen drastically over the past 19 trading days. I don't believe that's sustainable. I believe we see somewhat of a give back in terms of that bonds buying, which is obviously interest rates moving lower. So thinking that the broader stock market likely sees somewhat of a decline in the short term for the foreseeable future. So with that being said, if you enjoyed this video, please leave a like and subscribe, and I'll see you here next time.